The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, for those of you in the Northern Hemisphere, and good morning to our friends in Australia, New Zealand, and other parts of the Southern Hemisphere, where it's Saturday morning down under, a bright sunny day, and I welcome you all. I know we've got a few Australians and Kiwis with us today, so thanks for your attendance. I know it may not be the best time for a webinar Saturday morning. You all have lots of things to do, I'm sure. And Friday evening, you folks from the Northern Hemisphere who've joined us, thank you for your attendance. I know you probably had plenty of other offers of interesting things to do on a Friday evening, but I haven't spoken to you for a while, and I've got a whole ton of material that I wanted to share with you. So first of all, our special guest today is Daryl Narain. I've known Daryl for many years. He's and his lovely wife, Sage. Daryl's a great bloke, been a long-time Danielcode member, done many Danielcode tutorials. He doesn't miss many of them. And Daryl, we're delighted to have you with us today. So welcome to you, Daryl. Can you hear me all right over there? Let's see, what are we doing, Daryl?
Yes, John, I can. Thank you for that.
Okay, so good morning to you, and you're in Wellington, New Zealand, where the sun never shines. Is that right?
Well, actually, John, we're having I think one of the warmest Junes on record at the moment.
Yeah, that'd be the one. That'd be the one I missed for sure.
Yeah.
All right, Daryl, thank you for your being with us. We've got a PowerPoint here that I want to run through. We've got a lot of material to tell the folks today, so I'll be coming back to you in about 20 minutes or so as you follow this through. So we're delighted to have Daryl with us today, and he's here for a very special purpose because, of course, Daryl is the gentleman who, together with his wife Sage, they have been doing the FractZen scoring for us since before the beginning of the year. And it's an onerous task, very, very detailed. And one of the issues with FractZen is that because it changes its settings every few days and sometimes every day, so far it has not been possible for us to back test it on a mechanical or computer basis. So we've had to ask Daryl and Sage to pretty well put their lives on hold while they track this amazing thing for us, which they have done. So Daryl's here to talk about the FractZen results in some detail, how they do it, the care they take about these figures, the concern they have to try and give you the most accurate reflection of what this amazing new program is doing. And we're going to hear from Daryl in some detail as we move along. So welcome, folks, to this rescheduled webinar. Those of you who tried to come and join the webinar originally scheduled for Tuesday might know that we had a major power outage here in Talai in Queensland near the Gold Coast, where a tree fell down. It actually wasn't in my backyard, as Terry posted. It was somewhere in the next valley, but it was such a serious incident that they had to shut down some of the major hubs. And, you know, it's funny, I've dreaded this. I've been doing webinars, as you know, for years and years, and I've always dreaded losing the internet connection, and I have not one but two portable modems, which I suppose they're wireless, and we have a special antenna that points at the nearest connection point. That's up on top of the roof, so we get a good strong signal. And the theory is that if we ever have an internet problem, we've got not one but two backups. But in this case, the damage was so major that they shut down the hub, including where the wireless signals originate from. So Murphy's Law struck with a vengeance, and we had no internet at all. So I do apologise for that. Outside my control. Haven't spoken to you for a couple of weeks, so I've got an awful lot to talk to you about, and I'm going to cover quite a number of subjects, and do it fairly quickly because I want to end this webinar on time. I do appreciate all of you making your time available at short notice for most of you Friday evening, some of you Saturday morning, and I don't want to keep you past the allotted time. Just sort of running through the litany of Danielcode products, the various things we do. What I'm showing you now is a recent TO3 plus signal in Aussie USD Forex pair. And you can see that the grey bar, the outside bar to which the arrow points, went almost exactly to the blue line. 9438 was the high of that bar, and we had a Danielcode blue line at 9440. You know, I've heard a lot of very respected and very able commentators say standard studies on charts are not really terribly good, and that stochastics in particular are pretty unreliable. Well, I agree with that if that's all you've got, but the big difference about the Danielcode are these Danielcode ratios, these numbers from the Danielcode that allow us to create these blue lines and also the red and black lines that you see, which are the retracement or the pullback inside the range. And you can see how this trade sets up perfectly. You've got your fast stochastic, that's the 533 stochastic overbought. You look at the bottom of the chart there. You've got momentum just dying off. Let me get my usual tool here so I can highlight where we are. Here's this operating bar here. Had a 9438 high right at our blue line target there. It's interestingly, it's taken out the previous high. Markets always taking out highs and lows, swing highs and swing lows, and if they're moving at all, that's what they're going to do. So we've met the requirement of finding a target. This is the big difference. It's only the bars that go to the Danielcode numbers that validate using all the rest of your tools. And if you don't believe me that all markets turn at the Danielcode numbers, I invite you to go to the website and click on the tab that says Chart Archives, and then be patient because it's a huge file and it'll take several minutes to open. But once it does, you'll see something of the order of 30,000 Danielcode charts that I've created and posted for members over the years. And look, it's very hard to find a market that turns anywhere other than at the Danielcode numbers. And that's the key difference between the Danielcode and everything else. And you need to be getting those numbers. We don't do charts for every market. I simply don't have the time. All of these charts are created by me and by hand. And the time they take with their backup spreadsheets is immense. But for that reason, we create the signals for you. And you can be sure that if we're posting a signal, it has responded to or is at a Danielcode number. Once you add that to the mix, here you go. Here's your fast stochastics overbought. Here's your slow stochastics overbought. And here's your momentum indicator falling away. Here's the momentum high of the momentum indicator way back here. And by the time you get to this bar making its Danielcode target recognition, momentum is sliding away. That's our proprietary CCI indicator. Any of you who want these indicators, folks, if you're members of the Danielcode, just let Terry know and he will give you the Danielcode library free of charge, which has these particular Danielcode studies on it. Once you start combining these with the Danielcode numbers, everything comes alive and starts to work. And that's why these signals are so great. So there you got a reaction. You had your sell signal. Next day was an inside bar. Trade wasn't elected. Next day the trade was elected, but we didn't get filled because of the 2-tick buffer that we have. But once we see it's been elected, we had to sell it the next day. And we got a nice run down to the 50% retracement, which is one of the really common numbers that markets use all the time. So that's to show you that. Let me now move on to talk about this issue of rollover. Sugar and soybeans both had very dramatic price changes on their rollover earlier this week, late last week. And you can see this huge gap down on this chart, which is the yellow, the iridescent green bar there. Let me get back to your questions at the end of this, Zen. I see a few of you posing questions. I will be answering all of your questions, but just I want to get through this material I'm showing you, and I'll come back and answer your questions. So please, yes, feel free to post them. So here's your soybeans chart. This is the what Trade Navigator call the 057 chart. All of our Danielcode stuff runs on Trade Navigator, who are our partners. And the 057 is a continuous chart to which they just add the data of the front month. So this huge gap down here that you see is actually nothing to do with real price. It's the rollover of the contract. And here was the old contract here. When it rolled the new contract, there was a big discount in the price between the futures contracts, which is uncommon for it to be big. There's almost always a difference between the expiring month and the new month, which will become the front month, and that's for reasons of the cost of holding a trade, the implied interest on the trade, and also in commodities very much its seasonality, that there is often demand or otherwise for commodities in the future months. Millers, for example, people who are milling flour, milling soybeans, using them for to transform into some edible product, they have specific months they buy in. Similarly with the grains, Bernard knows a lot about this. He's a very big grain trader. They buy grains at different time of the year, whether it's the old harvest or the new harvest, for different purposes. So that big gap has just put the spotlight on what we know about commodities and this a big move. So here's another chart that just shows you the opportunities of trading this market around rollover time. Now, I've told you many times, rollovers are a prime time for at least an intermediate trend change. So you need to be on top of this and know what's the front month and which contract you're going to execute the trade in. Now, this chart here shows you that we had a blue line and TO3 buy signal. This is sugar, which had the same sort of thing, the rollover. It rolled over into the October contract, and we had a blue line and a TO3 buy signal for sugar on the last day before rollover, which was this day here. Now that signal, those signals, blue line signals, are valid for 3 days, including the day of posting. This was the day of posting. It was not elected, but you can see what happened the next day. This is now into the new contract. Sugar has rolled into the 2010 contract, and that buy signal is still valid. And if you executed that buy signal about where the point of that arrow is, you can see that you made $1,200 odd into Friday's close. And this is a market where the margin is only $550. So that's just an extraordinarily good trade, and you could have levered up on that a bit. Let me move on now to the fourth seal. There's a lot happening with the fourth seal at the moment, and I want to show you some of the stuff to just get you focused on. This is our long-term forecasting program, and Frank DB, who you know does a lot of the work on the fourth seal and helps me, he's very, very concerned about the Dow. He thinks likely a top is in place, but as you know, those who follow the fourth seal, we're always saying you must not anticipate the trade. You must have a Danielcode signal to pull you into the trade. One of the questions we're going to deal with here from Zen is that if you know the DC number where price will turn, then you should be able to produce a sell or buy signal in advance. Well, that doesn't work that way, Zen. If you read the Danielcode manual at the website, I'm always telling people, do not anticipate these trades. That way lies ruin. Simply because we have a blue line doesn't mean the number will turn at the market will turn at that particular blue line. We have lots of blue lines. and we need a number of things to set up before we'll get a turn. We need our stochastics and our momentum indicator to be supporting what we're saying, and then most importantly, we need the market to pull us into the trade. In other words, when we have a Danielcode sell signal or buy signal, it is meaningless until it is elected, which means it trades a few ticks past the last bar's true high or true low. And I've been talking about that in previous webinars. So for goodness sakes, do not try to anticipate that the market will turn at a particular number. We do not have that foreknowledge, and nor does anyone else. In fact, excuse me, I don't know if Mark's with us today here, but if you are, Mark, a special hello. Mark's a stockbroker in Southport, which is at the Queensland's Gold Coast. And I had the pleasure of having lunch with Mark last week, and he was telling me about a gentleman who's trying to come across to them as a client. He's not a client at the moment, but he's a large trader. He's got a $5 million account, and he has been reading too much of the commentary from people who write commentary on markets, all of whom, certainly the ones I'm aware of, have been bearish on equities for at least the last 2 years, maybe longer, whereas we, on the other hand, have remained bullish and even told you where we forecast the market to be in December. But this gentleman, anyway, short the Dow in a big way, underwater for massive amounts of money, and desperately seeking some help. So I'm going to talk to him about trading, and one of the things I'm going to start by saying is do not anticipate trades. If you look at our fourth seal page, you'll see we prominently say there you must wait for a Danielcode signal to pull you into the trade. So knowing where these numbers are means nothing until they get there with the correct setup, and then the trade is elected. That is, the market is saying to us, yes, we agree with you. So I wanted to highlight to you that Dow's at a very important position. You need to keep a really close eye on what's happening in the fourth seal. To show you how strong this fourth seal is, here's a historic post where Frank called the low in Huey, and you can read through that, and he called the low in Huey about 4 or 5 days early, but he called it to within a couple of points. Now, you can't trade futures in the Huey. The Huey is the unhedged gold producers index. You can trade options, but it's highly correlated with the gold and silver futures, so you can trade it in those markets. And what Frank's doing here is having a laugh that Barron's, a leading journal, has finally turned bullish on precious metals, and Frank had given you that information, and we posted in the fourth seal and in forum weeks and weeks before the world was aware of it, which is what usually happens. Here's the chart of Huey, which you should be able to see now. I put an arrow on it to show you where the fourth seal called a time on the fourth seal on gold. This is the Huey chart, and said it was due for a major rally very shortly. As Frank said, we were 5 days early, but it was pretty nice. And then actually on the day of the low, we put up another post being a bit cheeky and saying that's the low, folks, and so far that's turned out to be right. Excuse me. Here's the Huey rally, and I've showed you how you could have executed in gold futures. You had that huge run up from early January. It's worth about $15,000 per one contract, and there were any number of Danielcode buy signals there. So having this background knowledge of the fourth seal really does assist your trading immeasurably. This is the fourth seal comments on gold this week, and you can go to the bottom and see this was Monday's post. For now, we expect some downward action, but follow DC trading protocol with no bias until we get resolution on this issue. And he's saying that there's a major bottom building in place, and as long as the lows of December hold, this market's getting ready for a major up move. Well, you needed to know that because it came pretty quickly. Here's the COMEX gold chart, which again I say is highly correlated with Huey. We get signals in one. These gold, silver, Huey are so highly correlated that a market in any one of them can be executed in any other. And what we got there, we had a TO3 sell signal, which just gave us 1 day down. No dollars in that trade. And you can see, however, that whilst there were no dollars trading off the daily chart, you can see there's the same gold signal but executed in FractZen. So it got 740 on the run up and 520 from that 1 day correction. So you can see how trying to put these things together, the different alternatives that we offer you, just help your equity curve, help you make money, and focus your interest, because you need to look across the range of products available to find something that suits you in particular. This next chart is gold futures. It should have just changed for you, and I've put on the top of it what happened then. Well, we had the TO3 sell 1 day down. The next day there was a GMAG buy, and I've been talking to you people consistently for the last 5 or 6 weeks saying any of these signals that are elected, the next day is an immediate reversal. And that's because we can never tell if it's just going to be a 1-2 day counter trend, or whether, which happens in all trend markets, you get a counter trend, whether it's going to be a small counter trend or whether it's a real reversal. So you get the reversal. It didn't look very strong. Price certainly didn't want to stay down there, but it ran straight down to one of our red lines, which you don't see, but that's a fourth seal line, and it got support there and bounced up. Next day we had a GMAG buy, and I put in there a webinar buy, because I've been telling you now week after week that immediately after one of these Danielcode signals are elected, the next day and for 3 days it is automatically a reversal signal, because we are saying we don't know if this is the start of a counter trend or it's just really a 1 to 3 day counter trend, in which case the trend will continue. And you can see if you bought that market where I've got the GMAG and webinar buy arrow, you had a nice $4,190 trade per one contract up into Friday's close. This is the FractZen chart of silver at the same time of that rally. I wanted to show you the gold chart on FractZen, and I didn't have it until an hour ago when Sage has kindly sent it to me, so I am going to show you that, but I didn't have time to put it into the this presentation because there were folks already in the webinar. So there's the equivalent of what silver did. Don't forget, if you have a signal in gold, you can trade it in silver. If you have a signal in silver, you can trade it in gold, because they are so highly correlated. Now that does not apply to FractZen, but it does apply to all of your daily trading. What I'm going to show you in a moment is the figures that Daryl and Sage have been producing for FractZen since the beginning of January, and they are so extraordinary that I wanted to just reinforce with you some of the normal CFTC warnings to you that these are signals that are received by Daryl and Sage. They plot them on the chart meticulously. Daryl's going to talk to you much more about that. And they create these results for you. But they are hypothetical figures. They're not being buffeted by the things that happen in real money trading, which is liquidity, slippage, how do you get your fills, where do you get your fills, how long does it take you to get the signals on, etc., etc. So I just wanted to give you that additional warning. We have that all over the website. I show it to you in the compliance statements at the end of every webinar, but the figures of FractZen are now getting so extraordinary that I want to be absolutely clear that you understand what you're looking at are hypothetical results, even though they are done in near real time and in terrific detail. One of the points I want to make to you is that you've heard me talk often about the fact that to make money in trading markets, we rely on volatility coming into our markets, and we can't forecast volatility in advance. And if I can't do it, nor can anyone else. I don't wish that to sound as it does, but it's a reality that nobody has yet had real knowledge of the future. We can say things like, this is where the market's going so long as it stays in its trading channel and all those sorts of things, but the reality is nobody knows what happens tomorrow until it happens. And that's why I'm always impressing on you the need to trade multiple markets. And this is a pretty good example. This is FractZen on natural gas, which is not a market we've offered you yet on FractZen, but as you can see, I've gone back and these are figures that we've run for 12 months, the last 12 months. We always like to have some out-of-sample data. So, excuse me, whilst we know that natural gas is actually doing very, very well this year, I always want to go back and see some time out of what we call an out-of-sample data. Excuse me for a second. And this, these are the machine results of natural gas starting at the beginning of June 2013. And you can see that the trading there for 3 months is quite horrible. This is a market with 3,500 margin of that amount, and you can see that it just runs up loss after loss after loss until by the time you get to the end of August, it's lost $4,500. Now, well before that, I suggest most traders who are just trading 1 or 2 markets will throw up their hands, say this is dreadful, stop trading, say this FractZen's no good, and be generally disappointed. And that's what happens. Is what I'm trying to show you is that it is quite common for markets, particularly commodity markets, to go into a deep sleep for long periods of time. And we've seen it in all the commodity markets pretty well, can have these periods of prolonged lassitude where they're very quiet, there's not sufficient momentum to generate profits for us. But keep an eye on this, so you can see that this market, the FractZen trading in this market had lost $4,500 by the end of August 2013. And then now what I'm showing you is the end of year. The end of year, by the time it got to the end of May 2014, it had recovered and it returned $37,800 per one contract. So it recovered its $5,000 losses and went on to make another $37,000 on top of that. And this is why you've got to trade more than 1 or 2 markets. You should trade as many as you think you can, because there's always markets sleeping, slumbering, and other markets booming. And the idea is to get a reasonable spread across markets that are not correlated, so that if you do hit a quiet or bad patch in one market, the other markets are overcoming that. Now, how did it do it? I've shoved a lot of data in here, and it's pretty hard to see. But you can see that between about October and February 2014, from October 2013 to February 2014, one contract in natural gas made $41,000 in FractZen. And that's the power of this thing. So you certainly didn't want to miss out on that, but to keep your trading so that you're comfortable with it, and those markets that are quiet are being counteracted by those markets that are active. You need to have a spread, and you need a little bit of perseverance, folks. I have, unfortunately, 1 or 2 clients who seem to jump into some new product, and they last about 30 days, and they've given it up well before that. You do need some perseverance. If you're a serious trader, you need to understand that market flows come and go. There's good times and not so good times, and you need to stick to things because the better cycles are coming again. Here's the FractZen results for you. I'll just give you a couple of moments to look through those. As I put in the invitation to you, they are quite extraordinary, and we acknowledge that, and it's something that we're paying a lot of attention to. You can see that for May, futures made in FractZen $48,700, with almost 30,000 of that coming from the DAX, which is a very big market, incidentally. Those of you who are watching the DAX, code GX in Trade Navigator, bear in mind that the dollar value tool the Trade Navigator has is wrong. It shows $12.50 per tick. A tick in DAX is half a point. In fact, the DAX trades in euros, so that 12.5 is not US dollars, that's euros, and that's worth about $17 a tick, or about 17 US dollars, 12.5 euros, about 16.5, 17 US dollars per half tick. So just be aware of that, but you can see these massive returns again in June, in May rather, including not only the DAX, but when we do our equalized margins, and we do that to show you, because you've got markets like the DAX with 25,000 euro margin, and you've got markets as small, or dollar value as small as sugar, with a margin of about $550. So we put in this little calculation at the bottom so you can compare markets in real terms, and you can see that sugar and the Russell are far and away the leading markets in futures. The figures at the bottom are Forex, and that's the one with the text stop. They're the stops that come to you with the FractZen orders, and there is another calculation, the Daryl's research, and that's $180, or rather 180 tick stop, and that's about $6,000 or $7,000 better than the figures we're showing you here. But Daryl's going to go through those in great detail, and I don't want to preempt that. Here's gold, which has come alive all of a sudden. It hasn't been a great standout market for FractZen, but all of a sudden it's jumped out of the ground in May, and I want to show you how simple this stuff really is. Here are the signals that you've had in the first half of June. The dates on these signals are when the trade started, but they're taken into account when the trade ends. So that first trade, the big trade in gold, started on May the 22nd, and then ended on June the 2nd. But you can see it's quite manageable. You look what happened on June the 12th. All of a sudden you get a flurry of trades, 1, 2, 3. So you do need to be able to execute these, but I have this conversation constantly. If you're a serious trader and you see a program that is consistently producing not just results, but absolutely outstanding results, then it's your job to make sure you're trading it. And I can't at this moment help you there. Here's something we've been talking about a bit lately, and not many of you have taken advantage of it. This is letting you know about Jerry Winter, who's my personal broker. Has been for many years. He's a hell of a good guy. These are his details. He's done 2, 3, maybe even 4 Danielcode tutorials, and he knows everything there is to know about Danielcode. So if you want to chat about Danielcode trading, how to do it, how to get started, you just want advice on markets, call Jerry on Skype or on his phone number. He'll be more than happy to talk to you, and you can arrange a free one-on-one consultation with Jerry any time that suits you. Any products you're interested in, the Danielcode, here's the information you need to know. We don't do any hard sell stuff. We offer you what we have, and we say do a free trial and make up your own mind whether it suits you. We have a range of different products, and we think they're all very good. Terry is your man at support, and you can email him at support@thedanielcode.com. He can also set up a free trial of Trade Navigator charts and software. I've used them for many years. They're very, very good. Here's our compliance statement, folks. You need to be aware of this stuff, and that leads me into an issue that's just arisen today, that the NFA have issued a large fines against Vision Financial. Some of you have accounts with them. This is a matter that's been going on. It's not what you think. It's serious, but it doesn't affect anyone's trading accounts. This is a let me see if I can find the press release for you, so I can make this clearer. NFA. Here's the statement released by the NFA a few hours ago today. And this is a case that's been going on for some years, and it involves a client of Vision's called U.D. Chang, who had a business called ACE, A-C-E, Commodity ACE Investment Strategists, LLC, and he was handling massive amounts of money, I think about $100 million plus, and the allocation between the various clients' accounts was not correct for one reason or another, and the NFA charged three gentlemen at Vision, but not the owners, note, and also charged the company with not allocating the money in these accounts properly. This has taken a few years to get to resolution, but the long and the short of it is Vision was fined, and the three gentlemen who were responsible for this, not the owners, were fined $1.5 million, which they paid, and they also paid $2 million in restitution. Now, 2 points. None of this involved normal clients' accounts. There's no Vision had no profit from this. There's no suggestion that they did, but they have decided they're going to do a reorganization and start another business, which I've got the name of. It's going to be called High Ridge Futures, but it's the same business, and Vision have been allowed to continue trading until they finish that reorganization sometime in December, so it shouldn't affect any of you. There's no suggestion the clients' accounts have been plundered or gone missing or anything of that nature. So I just wanted to try and give you some information on that, because you probably read about it and get concerned. So I'm told on the best authority that's what it's all about, and the fact that they're being allowed to continue trading is pretty significant. If there was any suggestion of something else, they would be off the list really quickly. Okay, so we've only got about 20 minutes left, and I want to bring Daryl in, but I had a couple of charts I want to show you quickly before we went across to FractZen. This is a chart of COMEX gold, and the red lines you can see on it are fourth seal. This is our forecasting service. Amazing thing that forecasts a price well in advance, and you can see it looks like a cat's cradle really, but you can see that it's just been turning at all of these fourth seal lines with a high degree of accuracy. Where we are now is down here. I'll expand this so those of you who are interested in gold, as many of you are, I've been trying to write an article on gold now for weeks and weeks and weeks, and I haven't got round to finishing it, which is remiss of me, but I wanted to show you this position that here's gold, here's the low. Little rally retest, ran up and then found resistance. So this is a 6-day chart, don't forget, this is our main timing chart. Found resistance at this fourth seal line, then burst through to the next one, pulled back, and it found this junction of two fourth seal lines, which gives it very strong support, and it's now moving up quite dramatically. There is, of course, resistance overhead where these fourth seal lines are, and I wanted to show you a daily chart of that. This is the fourth seal. You've seen this chart. We talked about it earlier, but you can see the point here is that here it follows down the fourth seal lines. It gets support, it goes up, stops right on them, little one-day counter trend, up to the next one, ignores that, runs through, hits this fourth seal line here and reverses, and that's what caused the one-day counter trend. And look where it went to, the next Danielcode red line, which is fourth seal support, and off it's roared, and it's just burst through this old Danielcode red line, which is acknowledged here before the little one-day sell signal, and it's gone straight to the next number up here. So it can either turn there or it can go further up to this line, which will be up around 1338.5. So watch the Danielcode signals closely. We've been long since this day. We're still long, and see what happens there. The other chart I wanted to show you before we switch to Daryl is the S&P chart. We're now back to our 6-day chart, and I want to show you the S&P chart, and here it is. We've been running this chart since we called the low in March, and you can see that the S&P is still happily traveling up this trend channel, which has been running. This is a newer trend channel. I did a webinar on this. I'll show you where it starts from for those of you that are interested in trend channels, which are absolutely marvelous and essential. It starts from way back here on November 2011. Remember, this is its minor channel as it runs up inside these big blue channels, and this is just a vital trading tool. I don't understand how people get on the wrong side of the market long term, like our chap I was telling you about earlier. These Danielcode trading channels are absolutely magic. There's a webinar under the trading tab or the videos tab at the Danielcode website which shows you exactly how to draw them, and as long as the market is trading within that channel, it's going to continue going up. And I've already told you that if it maintains its pace that it's running at the moment and stays within this existing trading channel, special type of channel called the Danielcode trading channel, it's going to be up at about 2100 in December. Now, what are the things you need to know? If it breaks out of this channel, then the minor trend is up, and it will get support at one of the blue lines that goes along, test the lower channels. It's very overbought and has been for a long time. It's a very strong bull market, and don't be surprised if we get some sort of a correction. If it pushes up much higher towards the top of this channel, then you can see a correction is almost inevitable. Here's one, here's two, here's three as it goes into its new trading channel. Here's four. Every time it gets up to the top of this channel, it forces a correction. So keep an eye on this, or draw up your own Danielcode trading channel, and you'll be able to resist the constant calls that the market is overbought, which it is, that it is overvalued, which it may or may not be. But as traders, we don't really care. If the market's going up, we want to be long. If it's going down, we want to be short. And we work on such shorter time frames that we are never going to be caught on the wrong side of any of these markets. Daryl, that finishes me here for the moment. And folks, what I'm going to do, just so you know, is I'm going to end the webinar at past. That's our designated time. But I will be answering all of your questions. So do please keep typing in your questions there. Peter, what is the current top side of the SPX grey channel trend line? That's this one here. Peter, that's going to be, this is ends on June the 20th, this bar here. And if I just stick my cursor on there, it looks to be about 1977. There we are. It's 1979 until the 20th, which we're just about at now. So the next period is going to be 1983. Okay, I'm going to come back and answer all of your questions. Then Jan, hi, you're here. Jan Davis is here. Daryl, is that you making all that noise I can hear?
Could be, John. I just unmuted my mic. So.
Okay, good to see you. Good to have you here. It's time to switch over to you. Let me go through this process of making you a presenter and see if you can get control of this the screen and start showing your screen and what have you. Have you done that there, Darren?
Yes, click there, John. So just open this. Can you see my screen, John?
Not yet, but it's come up now, which is great. So, folks, I've told you a bit about Daryl, and we're grateful to have him here with us because Daryl's going to tell you the story of how closely we scrutinize these hypothetical results that they prepare almost in real time for you, how they actually do it, the concerns we have to make sure that these figures that we're showing you are correct, And so Daryl, over to you.
Thanks, John. First of all, just by way of initial background, in terms of preparing these figures, my job is really the easier of the two. My wife Glenys, who all her good Danielcode friends know her as Sage, Glenys is just so dedicated and committed to this FractZen project, and the time that it takes her each day in terms of her chart preparation and the drawing of her charts and the diaries that she keeps that ultimately come through with the data that I can then summarise into this sort of format. Is she just puts in an absolutely phenomenal effort, and it's really taken over her life for the last 6 months. And it's just, without the effort that she's put in, we just would not have this. We just wouldn't have this data to present. Anyway, just starting on futures, I've got a few colours on my chart, which John doesn't have on his. I always send these to John in black and white because most of you Danielcode people know John doesn't see many colours. So black and white and red are about it for John. So it's I've just added a few colours to make it a little more visual. But the futures results for May were just, well, nothing short of absolutely phenomenal, to the point where they caused us quite a bit of angst and grave concern in terms of them being correct. And a big proportion of the May result was in fact out of the DAX, as John has already alluded to. So John actually went right through the full month of May, and he checked every single one of our trades, and we came up at the end with only a few dollars difference, and we actually identified the one single trade where we were literally, it was only a few dollars difference, and we were even able to identify the exact trade where we got that difference. So we had, as I say, we had this great concern that the result was just out of this world, literally, but it has been really closely scrutinised for that very fact. Terry also keeps his own record, and Terry he's pretty satisfied that that the result is correct as well. So quite a degree of scrutiny in terms of the final figures. I guess May has been year to date just the outstanding month, and as I'll show you shortly, June has not really kicked on, and you would expect that after such an amazing trading month in May. It is generally followed by a subsequent quieter period, which we're seeing at the moment. And really the market, from our data, it slowed off just before the end of May and then carried on into June, and that's reflected both in the futures and the forex when we get to that in a moment. And just reinforcing what John has said, if you look across the various markets, and you just see that every month the profitable markets or the level of profit in a market, they just constantly alternate market to market, and trying to forecast which market is going to be the performer for a month and which is not is something that is beyond us and beyond anybody. And so hence John's advice, very good advice in terms of always trying to maintain a good cross-section of the markets. The little chart just down on the bottom here is showing the first 2 weeks of, or the first half of June, and as you can see, the result for futures for the first half of June bears no resemblance at this point to that amazing result that we achieved in May. John also alluded to the fact that he discovered that the dollar difference tool in Trade Navigator, which we've always found to be absolutely accurate, and actually has been incorrectly programmed for the DAX, and John has been talking to Tim at Trade Navigator about actually getting that fixed, and hopefully Tim will come through shortly and tell us that they've actually amended that calculation. But we applied the correction for the month of May, so the dollar result that you see there for May is correcting that error in the Trade Navigator dollar difference tool. However, the other months aren't corrected, and I did a quick calculation, and if we actually apply that correction to the other months, the DAX performance year to date is actually understated by around about $12,000. So the DAX is certainly showing to be an outstanding performer at the moment. And once again, we've got our year to date continues to be our little old sugar contract, our lowest margin contract. And once we apply that equalised margins exercise, which effectively brings everything up to the highest margin contract being the DAX, sugar just continues to be an outstanding performer on a very, very affordable level of margin. Okay, just move on to the onto the forex markets. And as most of you that have attended previous webinars will know, that we're now keeping a track of both our tech stock performance and this other 180 tech stock that we've developed as well, which came about as a result of some back analysis of stocked out trades. And once again, for the month of May, the 180 tech stock has come out just marginally, nothing in it really, only a couple $100, $150 odd, but it's come out marginally ahead of the tech stock, and also just quite I guess a little bit unusual in that we normally get either the futures or the forex markets in a particular month performing very well, and one will be underperforming, whereas in May futures just was outstanding, but forex actually held up very, very well, and was one of the better performing months. So we had, all in all, across all markets. When I say across all markets, that's forex and futures combined. Very, very good trading month, but as I said previously, just in analysing our data in a bit more detail, that performance really fell away in the last week of May and has carried through to the first half of June. We've got this tech stock comparison chart in the middle here, which just shows that the year to date, using the tech stock versus using the 180 tech stock, and then the bottom two charts just showing the first half of June in forex, which has been quite abysmal. If it continues like it's going at the moment, it'll be one of our worst performing months. But as we previously know, months that start out poorly can significantly reverse in the second half of the month, and vice versa. We've seen that before, so we're not going to make any conclusions at this point as to where June's heading, because we simply don't know. I just want to talk, I said to John, I'll just talk briefly about a few of the technical aspects of trading FractZen, and some of the things that we do, and some of the protocols that we've developed between John and Terry and myself, that we're all now universally following. And when it comes to the entry bar, for instance, anybody that's trading FractZen, that's got Trade Navigator charts, can track the results for yourself if you're prepared to put in the time and effort, and it will take a lot of time and a lot of effort. But you can use your 1 minute bars and align those with the text time that comes on your text message. Now, I know that some people are confusing their text time. When you talk about text times, some people take that as the time on their phone that they receive their text. The correct time when we refer to text time is the actual time that's contained within the text message. And the first thing that you want to do is check that your text message time is very, very close to your actual phone text time. In other words, there hasn't been a big delay in the time that it's taken for you to actually receive your text. So whenever we're referring to text time, we're not referring to the time that it comes on your phone. We're referring to the time that's contained in the text message, which is the time that FractZen has produced the signal. Then if you go to your 1 minute bar chart on any market, any particular time period bar that you're using, whether it's a 1 minute or a 240 minute or a daily, the time of the bar that is displayed is always the close time of the bar. So in other words, if you've got a text time that, for instance, was 1:14, it'll be, that text time will actually be 1:14 and some seconds. So the correct 1 minute bar to use is the close of the 1 minute 15 bar, because of the, let's say the time was 1:15, then it's the close of the 1:15 bar, or that 15-minute bar, because that is the bar that is actually forming. That 1 minute bar is the one that's forming when you receive your text. So you want the close of that 1 minute bar. So you receive a text at 1:14, in other words 14 minutes. The bar that you're using is the close of the 1:15-minute bar. And that is the standard protocol that, as I say, that ourselves, John and Terry are all using. The other thing that we're now doing as I guess as a standard trading protocol is, when we first started out with FractZen, we were taking every signal, and by that I mean we were getting a double buy or a double sell, or in some rare cases even a triple buy or a triple sell. In other words, you've got the same direction and consecutive signals. We would close out the trade and reopen the new trade. Now, the initial thing that you might say is, well, what difference does that make? Well, the difference that it makes is that we would move the stop, because we would treat the new trade as a new trade, therefore we would apply the stop to that new trade. So it was making a difference. What we're doing now as a standard trading protocol is that we always ignore a second signal or a third signal in the same direction. Now, even if you get stopped out, so in other words, you're in a sell, as an example, you get stopped out in that sell and then you get another sell signal. As a standard trading protocol, we are now ignoring that secondary signal even though we are stopped out of the trade, because John has had Terry do some back analysis on this, and it has consistently shown that to take that second signal is resulting in a poorer performance than ignoring it, because John has come to the conclusion that it's actually signifying a weaker trend in that direction. So, as I say, I just wanted to just cover those off so that you know, we've got a little bit more knowledge about some of the protocols that we're developing around the way that we're actually reporting these results. But using 1 minute charts and using those standard protocols, anybody that had the time and inclination and the mind to do it should be able to actually replicate what we're showing you. For a period, a good period at end of May and first half of June, Jerry Winter, John has alluded to Jerry as being both John's personal broker. Jerry's also our personal broker as well. Jerry is just a person of immense knowledge in terms of the markets and trading, and he's also a person that just has, in my opinion, just the highest level of integrity, and is a person as our own personal broker that we just have a very, very high level of confidence in, and the relationship with Jerry has our relationship with Jerry has been over many, many years now, and I just I wouldn't consider using any other broker at this point. So Jerry has he traded live. When I say live traded, he traded a sim account on a live sim account on Trade Navigator using the Fract signals for a period into May, beginning of June. And Jerry was supplying all of his data to me each day, and then I was aligning that on a spreadsheet with our data each day, and we were just wanting to do an exercise to see how closely FractZen could be in reality traded against our hypothetical results. And analysing that data, Jerry was consistently across pretty much the majority of his trades, except for some specific instances which we were able to explain. He was getting his trades entered within 1 to 3 minutes of the actual signal times, which I think was an absolutely great effort. And what we actually found was that in the vast majority of instances, Jerry's entries were within a very, very small number of ticks of our own entries. And that 1 to 3 minute timing difference in terms of the actual text time to Jerry's getting the trades on, sometimes it resulted in Jerry getting a slightly worse off entry than we got, and sometimes it resulted in him getting a slightly better entry. And in all honesty, they pretty much counted each other out. The positive versus the negatives over those minutes, sometimes the market would move away a bit, sometimes it would pull back a bit. The only significant variances that we came up with was when we had these particularly fast-moving markets, and they normally came around a particular announcement in the market, some specific thing that caused the market to behave very quickly and very erratically, such as the ECB announcement, for instance, the European Central Bank announcement, which caused a lot of reaction in the market. And it was instances like that where we had some very fast moves away, where in actual trading, Jerry's result was different than ours because he just those few minutes actually made quite a significant difference. And I guess all we can really hope for is that we're still working towards John is still, and with Terry and Tim at Trade Navigator, all very actively working towards trying to get the auto trade functioning. It's continuing to be elusive, and as Jerry and John and I have discussed, these fast move markets, the anticipation is that we would, if we had the auto trade functioning, we would get into the market something probably a little bit worse off than the actual hypothetical results, but something a little bit better off than what Jerry was achieving under his manual trading. Would be somewhere in the middle, was what we would anticipate. But John can probably allude a little bit to in his close off to the auto trade, but we're all still highly optimistic about it, and we're still ticking off the issues. But it seems like every time we make 2 steps forward at the moment, we're making a step backwards.
Yeah, that's the nature of programming, Daryl. As someone said to me today, you get your next step and you test it, and you find a flaw in it and you fix that, and then you've got third parties involved in doing some of this programming for us. So you wait for them to come back to you, and but anyway, be assured we're all working at it. Daryl, are you close to wrapped up, because we've hit the 1 hour?
That's it. Yes,
Thank you.
That's it. That's all the points, the key points I wanted to cover, John.
All right. Well, thank you so much for your attendance today. I know it's important for credibility that you folks understand how detailed the work of Daryl and Sage is, and as he says, they've had to put their life on hold to do this for you guys, so you can understand the market flows and the profit potential in this amazing product. So get into it. I know some of you are waiting for the auto trade. You might be waiting in vain. I can't even tell you whether there can be an auto trade. This FractZen stuff is so revolutionary that, as Terry says to me, with almost every program you're asked to write, you can find parts of it that have been coded before, and you can copy that and then build the links, but nobody's ever thought of trading the way FractZen trades. I'm waiting for a shift to say what were your smoking need and where's your thought of it, but it is so revolutionary that it's never been coded before. There's no background coding. Everything is greenfield breakthrough stuff. Anyway, look, thanks very much for your attendance, folks. I don't want to keep you because I know it's Friday night or Saturday morning, wherever you are. And Akshay, you're here. That's great to see you. Make sure you get subscribed, mate. I'm about sick of doing the nifty if you're not interested in it. So let me know. Alan, new member, lovely to see you here. He's with Jerry. That's great, Albert. Andre, Ben, my mate, FXFX, Bill Ford, he's an old member. Craig Eyes, he's a new member. Nice to see you. David Webb, he's one of our great old campaigners. He loves the Danielcode Black Line, which is just fantastic. Daryl Corey's a big trader. Daryl, he was at the, we had the pleasure of meeting him and the lovely Chantel, Daryl, didn't we, at Waiheke Island. She's an extraordinarily lovely woman. Lovely to see you here. Daryl, Elgis, Mr. Lyons, Graham Johnson, hello buddy in New Zealand, good to see you. HN, HD Stevenson, I know you, I just can't put the name to the first part. Jan Davis, we haven't seen you for a while, Jan, I know you've been very busy, lovely to see you back here. Jeff, under par, thanks for your nice comments about my daughter Bodhi's graduation. Jerry Winter, you'll be feeling pretty chuffed with Daryl saying all those nice things about you. John Watts, he's an Australian, nice to see you here. John Kirk, Lois Robertson, but good old campaigner, been with us for years and years, lovely to see you all here. Marilyn, he's a reasonably new member, he's learning to trade with us. Mick, Paul, I can't go through you all. Peter Andrews, he's my old mate in New Zealand, a wonderful, great friend of ours, and thank you for your nice comments about my daughter's graduation, folks. Peter, hello Peter, Peter Norton is another, lovely to see all you old friends here. I mean, gosh, there's Dick Brewer. Dick, lovely to see you, mate. Richard, Rob, oh, lovely. Scott, hello, Scott. He's a big FractZen futures trader, forex trader. Sean Shift, my old mate. Shift hasn't said anything. He's sitting there lurking. Strikes, Trevor, Kent, William, and Xenophobia, who's asked a couple of questions. I suspect Zen is my old sparring mate from New Zealand. He's, I think he's an Auckland guy. I have lunch with him in Hamilton occasionally. His name's Rob. He's a great guy, very knowledgeable trader. And I'm going to just briefly answer these questions, folks, so we can end this webinar and let you go. And I do thank you for staying with us so long. Zen, your question is on FractZen results of gold and silver. If they are correlated, why has silver been in a loss in the last month and gold positive? Thank you. Look, really good question. When we talk about correlations, we're talking about correlations mainly off the daily chart, in that if we get a trade elected in gold, you can execute that in silver. Same with the Huey, sometimes give us signals. You can execute that in gold or silver. But the trades do require to be elected. That is, if it's a buy, it's got to trade above the true high of the previous bar. But when we get down to the micro business, it's not so much. But I'm going to show you a trade here. I think you can see my screen now. Now we're viewing Daryl's screen. Daryl, can you throw this back to me, please? Daryl, can you throw this back to me so I can show this screen here? Let's see, we're waiting on something. No, you haven't been able to throw it back to me. Daryl, try again, please. Let's see if I can do something here. Okay, we have to dismiss you apparently, Daryl, to get my screen back, but we don't seem to, folks, I don't think you're seeing my screen. I don't know. Anyway, that's what we have. So thank you, and I've lost all of my screens on the way back. I hope you can still see the screen, but if not, I'll post it anyway. And as I've seemed to have lost that tool, here we are. I still could look. I don't think you can see my screen. Daryl hasn't been able to put it back to me. No, I want to make him. Cancel that. Bear with me, folks. I'm fighting technology here. See if I can. Yes. Okay, normal service is restored. Oh my goodness, let me just check what you're seeing. You should be able to see my screen now. It doesn't appear to be wanting to show that.
John, I've got your screen up.
Have you? Okay, well, I was trying to show you a gold chart of this last FractZen move in gold. I showed you the silver chart because I didn't have the gold chart, but Sage kindly sent it to me about 10 or 15 minutes before the webinar started. And as I had the webinar showing, to those of you who'd come in early, I didn't want to switch it off and you'd think, oh goodness, he's lost his damn internet again. So anyway, I hadn't, but here is what the gold FractZen chart did in that nice run up there. It's just extraordinary stuff. Please, I ask you, those of you who are waiting for the auto trade, don't. Get yourselves subscribed, get yourselves a couple of markets at least and start looking at them and following them. I have no idea if or when the auto trade will be ready, and in the meantime, FractZen's making a ton of money in these markets, so you need to get into it. I think that's all. We didn't have a whole lot of questions today. Let's see what we've got. Peter, yeah, thanks. Thanks, John. Terry. Oh, this is Jan. Thanks, John, Terry, Daryl and Glennis. Looking forward to auto trade, Jan. Yeah, we are. It's nice to see you back here, darling. How else can it be done without auto trade? Takes a team to manage just one trading account. Jan, probably not for you. I know that you have limitations, the amount of time you can spend with your trading. We have got a lot of people trading them manually. And my mate Daryl in Mossman's one of them. He does get very tired at the end of the week. Ben, massive moves in a short time frame. Question, can any one of you advise what impacts you've seen in the FractZen results chart? Ben, I think Daryl's covered that in some detail. In the time frames we're talking about to execute, it'll be sometimes be better, sometimes be worse. But we have seen a couple of the big moves on announcements that have moved away, and you don't get the benefit of the whole move, but hopefully you make a good bit of money anyway. Akshay is going to be in touch very shortly. Well, mate, we started doing this nifty in these Indian markets for you and your firm, so let's hope that we get something here from you shortly. Email me, tell me what you're doing, mate. Why aren't we seeing a FractZen live account result? Jan Davis, we haven't been running a live account. We've been running this SIM account that Daryl and Sage have been running for us, and we've talked about that a lot today. We think it's very, very accurate. Everyone, I can assure you, is concerned to make sure it is as accurate as possibly can be. Anyway, that's it, folks. Listen, thank you so much for your attendance. Those of you where it's Friday evening, relax, have a drink, and we'll have another webinar next week. Hope to see you there. Daryl, thank you for your attendance today as our special guest. Always illuminating to have your knowledge and understanding of these things. Of course, those of you who don't know Daryl, he is a chartered accountant amongst his other great talents as a racing car driver and company director, CPA you'd call it, so he's very familiar with figures, and he does a mighty job for us together with Sage, who actually does the hard work. Daryl gets to put it in the glossy spreadsheet and talk to you about it. That's about right, Daryl, isn't it? Anyway, that's it, folks. Thank you for your attendance. I'll enjoy your weekend, and we'll certainly look forward to seeing you next week. Bye-bye.